Hey. Jumbo. Ohio. How you doing, huh? Yeah, my hair does that. I'm a Superman hair guy. All right, let's get on with it. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. It is a Tuesday, the second of the month, and maybe something beautiful is about to happen in the world we call Forex. So, when you realize you want to spend the rest of the day doing something, you want the rest of the day to start as soon as possible. Let's go. Let me remind you, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Ni hao ma. Oh, look at all those degrees. I started a project over the weekend. You can see I got a thing over here. And then I'm going to put those here and here. So it's happening slowly. Just haven't had time. So, cool. So, welcome to Forex.Today. My name is Wayne McDonald. I will be your host today. We will cover things technically and fundamentally. In fact, I want to start fundamentally, if you don't mind. So, ask questions, get involved. If you could, while you're here, would you please click the like button and maybe consider subscribing? I do these webinars every day. And I've been doing the daily webinar thing for almost 20 years. It's pretty close to 20 years. 20 years. So obviously I have a passion for trading, and great. So I learned a few things. I've made plenty of mistakes along the way. I've done a lot. So I'm here to share, so ask questions, and I will do my best to serve. I look at this as a form of leadership through servitude. So I am your humble servant, and let me know how I can help, and I will do my best to provide. While you're at it, please visit tradersway.com. They're a broker. You're a trader. You need each other. It's a symbiotic relationship. So ultimately, as a shopper, if you're shopping around for an execution partner, you're like, I want narrow spreads. I want big swaps. I want fast execution speed. I want world-class customer service. I want a choice of platforms. Traders Way has all of that. And I'm not sure if I said it yesterday, but I think I did. But anyways, I could say it again. I was playing around. I know somebody that has an account with a big broker out of London, and they asked for some advice, whatever. So I was looking at their account, and then I was checking the swap on the exotic pairs, because I thought, oh, this is interesting, because they had a whole bunch of pairs that Traders Way doesn't have, just like super exotic, let's say. And anyway, so I went through this. I'm like, oh, what does this pay in swap? Negative. Wait, what? Negative? They charge you swap on both sides for that one? And I thought, well, maybe that's because it's super exotic. How about this other one? Negative. What? Then I started looking at the exotics like South African Rand that Traders Way does offer, or Mexican Peso that Traders Way does offer. I'm like, oh my God, this broker out of London is double charging. Whoa, how bad is that? So anyways, thank you, Traders Way. It just makes me feel so good because I'm getting paid huge swaps. Nice. So ultimately, if I were a client in that big London brokerage firm and found out that I was being double dipped in fees, I would not feel good about it, and I'd probably lose some faith and some trust in the broker. So anyways, so once again, being paid the full swap, Traders Way has earned my loyalty and respect, and it was just proven once again. So if you like that kind of stuff, give them a try. Find out for yourself. Tradersway.com. Check it out, by the way, if you want to know if you're being double dipped, you go to this thingamabob called Market Watch, and then you click on what you want to be, right? Like, let's say, what does Eurozar pay? So you highlight it, you right-click it, you pull up specification, and if you're short, you're earning huge swaps. That's huge. Massive swap that you're earning. Because when you're short, remember, Euro has a negative interest rate, and South Africa has a big positive interest rate. So you're actually earning to get that kind of return. You actually are earning on both sides, which is good. Now you're double dipping in your own profit, right? For yourself. So anyway, so dude, this is great. So I looked at that other broker and it was negative, which means they were collecting this and then charging you money on top. You're like, but they probably offer some stupid BS, low spread nonsense, and then double dipping you on that and collecting the fees some other way. So anyways, it'd be like, anyways. Oh, I need the coffee today too. Ugh. All right, so I wanted to do something. I'm gonna have to Alt Tab for a second. So this, it's 8:15, so this should be updated. Let me refresh. Let me reload. No. I just don't know when 1200 UTC is. How come we don't have the November number? I guess it's tonight. I don't know. I can't figure it out. I thought this was coming out. So I guess it's not coming out. I thought it was coming out. This is supposed to come out right here. No, 16th. Then hang on. Their website's not updated. Hang on. Find out more about Global Dairy. We'll get the latest results. Well, where's today's? Anyways, it's in here somewhere. I need to get more sleep. I can't figure it out. I need to get more sleep. So let's start at the top. Yo, I was going to cover that. I need to get my lactose on. Pat, I guess you'd have to speak to your government. Okay, cool. All right. So one reason I'm tired. I was up late last night doing research on the RBA. And maybe an hour and a half I spent on the RBA website. And interesting, this big move in Aussie, and we knew something was coming. We didn't know up or down. But down makes sense. But anyways, the research that I did, yeah, that's what I thought, your customers. So I couldn't find, I think they're slow updating the website is what it is, but we'll get back. So I did this research, and the RBA had this tone back in mid-September. They said, We have an inflation target of 2.5 to 3%. And we want to see inflation above that target and for an extended period of time, not for a couple of months. And what he said, right, this is low, he says, we are not even thinking about raising interest rates until 2023, but probably 2024. So if you think we're going to raise interest rates, if you're pricing in, he said he's a little astounded because he said the market is already pricing in interest rates in early 2023 and some people in 2022. And he's like, but that ain't going to happen. It's just not going to happen. Maybe 2024. Because he'll want to see 3% inflation all the way through 2022 and 2023. And in particular, wage inflation is what he was talking about. Wage inflation. And he said wages, even though there's a labor shortage, wages are only growing at 1% in Australia. And he's like, this needs to be in the threes. He literally said on multiple occasions, wage inflation needs to start with a 3, not with a 1. And wage inflation needs to start with a 3, not with a 1. And this will take time. And he's not thinking months or quarters, he's talking years. Okay, this was 6 weeks ago. And now apparently they've dropped their inflation target. That's crazy. So the only thing that happened here, no change in interest rates. Now we'll get a statement, I think it's on Thursday night, but there's no change in policy except for the drop in inflation targeting, which he was adamant about 6 weeks ago. So we have to figure out what that means. What does that mean, Basil? We'll have to figure that out. Why is he backtracking? So I think reading the statement coming out at the end of the week will be important. There's another reason Aussie is weak. Does anyone want to take a guess? Well, fundamentally speaking, China is a big customer of Australia. Australia sells a lot of stuff to China. Right, Codename says, hey, so hardcore lockdowns. Not in Australia, but in China. So China announced that they're closing some universities and some schools and stuff like that. But they also announced recently a ceiling, a curb, on the production of steel. Okay? So China is not producing as much steel as they would normally. So if they're not producing steel, they don't need the input. Input being iron and coal. Okay? Now it turns out Australia's two biggest exports by dollars, by Australian dollars, is iron ore and coal. So China, when it's making steel, buys at least some iron ore and coal from Australia. Okay, great. This is the chart right now. What do you think? Look at overnight. Does that say negative 16% in one day? Wowzer. That's like a Bitcoin move, huh? Hey, look, I'm a millionaire. Oh, no, missed it. Come on, Shiba. My Shiba's going to be worth $40 million. Yeah. There's a house for sale in Los Angeles for $40 million, and I like it. It's nice. I need $40 million. Come on, Shiba coin. Come on, Shiba Inu. Anyways, look at this, huh? What a day. Oh, there's Shiba Inu. Anyways, whoa. Yeah. Whoa. So that happened too. So, yeah. Oh, yeah. Okay. So I'm in pause mode, man. I'm in pause mode. Now, the day trading group saw this coming, but the interesting thing in the exercise that I tried to give to the group is at the time it was possible. Okay, it's possible. We had very obvious signs that, let's say, Aussie dollar or Aussie yen would come down. Okay, signs, but it hadn't happened yet. So I said, don't talk yourself out of the trade that you might be, let's say you might be buyers of these things, but you're like, dude, but there's a hardcore ceiling above us. This is true. But as far as the dynamic support before that iron ore crash and before a verbal change in policy, or at least a change in policy sentiment at the RBA, before any of that happened, yes, we had that clear resistance, which is good. I didn't say it didn't exist. We've been watching it for weeks. But at the same time, we were still riding support. So think of it more like getting squeezed in the apex of a triangle. Okay. So, the Shiba thing. Yeah, I have 4 million coins. It's not a big deal. But, if they go to 10 cents each, right, pays for my pool. If it goes to $1 each, it doesn't do anything. If it goes to $10, of course it won't. It can't. But if it did, then I move to Los Angeles, right? Right. Pat Williams, Mammoth Fitness. Can you post the day trade link to buy in? Oh, you mean to join the group? Yeah, it's part of fxbootcamp.com. And it's only for members of the swing trading group. So you have to join FX Bootcamp, then join the swing trading group, and then join the day trading group. Okay. Yeah, why would it go to 10 cents? It wouldn't go. It wouldn't go to 10 cents. But if it did, But it wouldn't. It wouldn't, right? But anyways. So anyways, going through here, one of the things I want to get across the psyche, you don't even have to see the chart. But the psyche of the issue is, put it in this context. Don't think about the exact situation yesterday. Think about just a general situation like yesterday. Let's say you're a bull. And the bullish trades have produced. Like there literally was bullishness and you've been riding this bullishness. And then you come up against resistance and you see it. So the first thing you should probably do is, with some confirmation, take some profit. Cool. Which we did. Great. Then it comes back and it sets up again and you take another couple of trades and they're right. Now, and then you ride back up. And it hits that resistance and confirms the resistance a second time. Once again, maybe take some profit, or maybe these ones you hold on to. Comes back again. And now you're kind of it's not going down, but it's not going up. It's not going down, but it's not going up. It's not going down even less, but still not going up. So you get in this situation where you can talk yourself out of sometimes reasonable trades. but sometimes there is a collapse. But that's what the resistance is telling us. Now, in the beginning, the resistance comes from profit taking from the bulls, which we did. But then later on, the more touches you get, the more likely a bear is going to actually start selling. Okay, fine. So the situation we were in is we were at a triple, quadruple top. It's obviously there. We've been playing in it for weeks now. We see it. It's obvious. We're discussing it. In that situation, in particular last night, I'm like, recognize it's there, recognize the risk, recognize we got an RBA meeting, and it's either going to blow through the upside and we move on into the new trend, or it's going to drop like a ton of bricks, in which we need to get out of the way because there's quite a bit of space below our feet. Okay? So it's a turning point. It's a critical moment in time. We need to, but what do we know? Yes, we fear that resistance, or at least we respect it. We know it's there and we know it's real. And we need to, and what we're doing is addressing that risk by coming up with a strategy, a thought process of how we want to handle it. If we add new trades, are they smaller? Should we move stops? Where's our kill zone, right? And all that kind of stuff. And then what do we know? What is supportive in this case? Even though we know what's resistance, what is support? And we had things like a proper moving average acting as support. We had daily pivot points stepping up. All the trades were set up on weekly pivots. So we had weekly pivots, daily pivots, a supportive moving average, and a fundamental bias. But we know we are opinionated that our fundamental bias is right, but we have weak convictions for it, meaning if things go wrong last night, which is still today, but it was last night for me, if that collapsed, then I have to back out because the likelihood of it skyrocketing up now is dramatically less. It might take a week. It might take a week or more, right? So it's just more like that was a critical moment in time. Lots of money was not risked. Lots of trades were at break even. And now it's sort of, now you have to do something. Before, if you were doing something, it was because you were afraid. But there's a difference between being afraid and recognizing the risk and managing it. You're just managing the risk. You see it, but the supportive elements of your trade plan, because I know you have a trade plan, the supportive elements of your trade plan were still valid. So if you see the risk, but the market hasn't changed, then address the risk, but maybe don't walk away. And I think it may have been premature to trade against a fundamental bias unless your fundamental bias was a bear. There really wasn't anything else for you to do, and that's why a bull would recognize that as legitimate resistance. Okay, you see that? There was nothing else for a bear to do. And then things came in line. Okay? So, right? So anyways, so I was talking about Aussies specifically, but I want you to think of these things more general, like what do you do when you're caught between a rock and a hard place? What we decided to do is reaffirm the facts and then say, based on the facts, how should we behave? Okay? And in this case, it did collapse. It's not surprising, but my behavior will change. And that was the adjustment that I made last night was I said something like, if we're down here, I take a break. In fact, I might take a break for a whole week. That's what I said. Because this is meaningful. But in the moment that, excuse me, in the moment, we were sort of here, kind of doing this. And this was still reasonable, still possible. I had the moving average, I had the day, on top of that day, on top of that day, on top of that day. And, we were basically at the mean price. And like it was still there, And I didn't say, oh, this is stupid, that we're for sure going to break this eight. No, I'm like, that's legit resistance. And we should recognize it, we should respect it, and we should have a risk management plan. Okay? Now, one of the things is, if you're looking for a trade, maybe this buying here is not a good trade, but what if you're in here or here? Okay? Well, then the next buy-in would be the higher high, higher low, which might happen. But if we're down here, take a break, take a break, take a break, take a break. Okay? So this collapsed hard, but I'm pretty sure I was on this trade, but my stop would have been like, I think I was in it last week. So my stop would have been there at break even. And so now what do I do? Nothing. I'm going to watch ADP tomorrow. I'm going to watch the Fed meeting tomorrow. I'm going to watch the Bank of England decision. That'll be interesting. I got non-farm payrolls live. I'm going to do that. And then I got my mutual fund Monday. So cool, man. I can let this stuff do whatever it needs to do until, let the snake coil. Just don't step on it. Yeah, I see. Okay, going with the buy stop idea, right, Greg? Yeah, sure. I could do something like, let's say here. Okay, now I've done something. Good. Okay, I don't need to do that, but it shows that I ain't not doing nothing. I ain't not doing nothing. I'm like, I'm working. That's my next opportunity, right? Okay. Thank you, Yona. Good morning to you. I thank you for your kind words and positive energy and support. Thank you. Okay. But you don't know me, Yona. You don't know. Yo, no, 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 no. Yo, do, 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 do. All right. You see what I'm talking about here? So I will wait. Yona. Yo, 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 Yona. Bum, 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 Yoda. Right? Anyways. All right, cool, right? Yeah, I wonder why my eyes are all bloodshot. It's a Tuesday morning at 8 a.m. and I'm struggling to stay awake. I wonder why. Oh, yeah. Okay, cool. Cool. So anyways, there's the next one. Oh, she says, I'm only doing all of this to sell you training courses. But then I guess she doesn't know me. All right. So anyways, this is where I have to back off, right? So what do I know? If I was a buyer, my two best prices are here based on pivot points, which is measuring what happened last month, which is low, high, and where was the close? I guess close here, right? But support says down here. So I would kind of try to combine some of these things and 82.50 or I don't know. So the reason I back off here is that I need to have it set up again for me. Remember, I don't buy lower lows. So I need for it to set up here. I'm not projecting that it will. I think it most likely will fall farther. but that is possible. Now, if you buy that, you're buying a range, and I'm okay with that. I'll buy a break of the range. The next one is the central pivot and the cluster of the weekly bearish target. So this is actually the weekly sell, and this is the weekly target for selling. So we could get into this area and some profit taking. Remember, we got the Fed, we got the BOE, we got the RBA statement coming out on Thursday. We got non-farm payrolls on Friday. Like, dude, there's a lot of risk in here. So I can let it come down and do whatever it needs to do. And then we can rebuild once we get through all that noise, which is fine. Okay. Okay. So, the next thought, just using technical analysis now, the next thought is that's the next zone. I mean, this is just technical analysis, right? That's the next buy zone. And there's something here down here at 82. I hope we don't go that far. But and this would be great if this held, but see, I can't put money on it, or I should say I won't put money on it. I know it's the bottom of a range, but in my other types of analysis, it's just not attractive, right? So I see a giant drop in the dailies. I don't buy those. Okay, for example, just one little example. I'm a trend trader, and we just went from a bottom to a top to a bottom to a top to a top to a bottom. And that's not a trend, that's a range, and I'm a trend trader. So if I did buy it down here, I'd be ignoring sort of like the conservativeness built into how I trade, and I would be buying here with the idea that this time is different. We break through, and then I buy back, something like that. Or I can just wait. Do I really want to put money in the market right before the Fed meeting announcement tomorrow? I don't see how that would be wise. Okay. Should I buy the British pound right before the Bank of England? So on and so forth. What about non-farm payrolls? Is big money going in? Like, are institutional investors investing right now? With Wednesday, Thursday, and Friday being hardcore, fundamentally risky, right? Now, Hope says it's a consolidation range. Yeah, it's a snake coiling up. Okay, cool. It's a spring, right? Gathering potential energy. The idea is when it is converted into kinetic energy, I'd like that to be the upside, right? So it's like one of these things, like there's real risk. And I'm not eager. Okay, I was okay up here. And remember, I described all of this before it happened. All before it happened. I shared my psyche, my emotions, my thought process, my reasoning, and how I went through the thought process to come to that conclusion, shared it with everybody in the day trading group. And so now here we are down here, and now my behavior changes. This was still reasonable at that time. Now it's here. So now I changed my strategy, and then I'm like, you know what? Wednesday, Thursday, and Friday, I don't think institutional money is going to come into the market. What the... Wednesday, Thursday, Friday, WTF. Okay. I don't think big institutional money is going to come into the market, so I don't think these will move yet, but we're going to learn a lot of new information. Will the Fed start the taper? What's the Bank of England going to do? Raise interest rates by 0.15? Or not raise interest rates, right? What happened at the RBA? In the last 6 weeks, did they change their opinion? Why did they change their opinion? Will that be in the statement that's released? I don't know. I got to read that. What's NFP going to be like? Is there job growth? Is there wage inflation? What about hourly hours worked? What about labor force participation? U6 versus U something else, right? Like, there's a lot of really important information. And I can trade all of that as knowledge versus guesswork on Monday. Cool. Cool. You see now the logic and the reasoning? So anyways, cool. Let me get some coffee, man. Okay. Okay. Yeah, scalping's totally fine though, Hope. Yeah, absolutely. Right? Scalping's and intraday trading, perfectly fine. All that kind of stuff. Yeah. Yeah. All right. So I guess we could take a look at, first of all, let's put this on hourly. And then let's see if we got that dairy auction. Global dairy trade. Did we get this? Come on, load. Still October 19th. How come it hasn't? And then this says the next event is 16. So where's the data from today? I can't figure it out. I'm too drunk to taste this chicken. Why isn't it here? They just haven't updated their page or what? Isn't... Anyways, this used to say today. Now it says 2 weeks from now. But this still says last month. So everything has happened except they haven't released the report. Strange, strange. When you're strange. Anyways, that does impact the value of the New Zealand dollar. So anyways. Let's see. Okay. Wow, this one's close. I'm looking at it and I bet you it came down just far enough to stop me out. It was a day trade, not a swing trade, but if it was a swing trade, I would have survived, and it was a day trade, so it didn't. Interesting. But I'm kind of looking at how it responded, and that's interesting. It bounced at support. I'm going to redraw this slightly as we got new information. Grab these real bodies here, and that looks interesting. Okay. So, okay. All right. That's interesting. I like this. It's interesting. Because many of the other pairs have lower lows. Okay. But that's okay. So, you know, just like that other pair, what was it? Kiwi? Trap it in a range. No, I'm a bull. So the way I look at this is not down. Doesn't mean I want to buy it yet. But boy, oh boy, that is hopeful. It went from just, you know, almost tragic to supportive. Now, let's look at the facts. The best selling price for bears is here. Sell. For the week. I'm talking weekly. And we knew that on Friday, and it was probably even set as far back as Thursday. I'm not making this up. Okay? That's just that. It's straight out of the training course, straight out of my book from 13, 14 years ago. That's just it. If you're a bear, that's the best selling price you could hope for the week of November 1st. The best price for bulls is here. And if you trade in the middle, you're in no man's land, right? Or no man's land, depending. Okay. Cool, but right? Cool, but yeah, that's the weasel, isn't it? So, so I look at this and I'm like, my gosh, because Aussie made the low. So you look at the ends and like, okay, all the ends are going to come down and reset off monthly pivots. Okay, great. It's not that surprising. Come on. But, and yes, that is a big but this held. Oh my God. There's bulls bought that. That's not bears taking profit. What kind of bear would sell there? Because here's the thing. If you sold, okay, at 132.36, your target is 131 minimum. And you didn't even come close to that. Why would a bear, see, a bear would not take profit here. A bear's not going to say, well, I want to sell here and I want to buy that. No, dude, that's not a bear. If you're intraday trading or scalping, you don't really have a fundamental bias. You're like, well, I see down now, maybe later up, right? So a bear is going to say, here's my sell zone for the week, and the green zone down there is a target. Remember, these are targets, not entries. A lot of people are confused. They think that sell here. No, take profit there. I was very careful to name it the pivot profit zone. Remember, I invented these. Okay? Pivot profit zones. So if you are a bear, you're going to sell there and you're going to take profit down here. Now, it's easily confused because very often you'll get green candles there, but that's not people buying, that's people getting out. It's different. So when I see that this comes down, a perfect sell. If you sold there as a bear, good job. That's a great trade. But it bounced right here. And I'm like, oh my gosh, that's not bears taking profit. That's bulls buying. And so I look at that, I'm like, hey, how you doing? Huh? I look at that and it's beautiful. How you doing, huh? So, okay. Not ready to make a move yet, but it's got my eye. So now I want to see something similar, at least on one or two other pairs. Now, Kiwi is just simply trapped, and it didn't even really have this pullback. It just kind of got trapped at the top. So that might pop, especially if we get good lactose numbers. Okay. Okay. Cool, right? So, hey now. CAD is one that I want. I actually sold the USD CAD last night. I waited for it, passed on two opportunities. I wanted a better price. I wanted a better setup. I finally got the better price. I got the better setup, took the trade and lost money. Yeah. Right? A beautiful loss. A beautiful loss. Okay? Anyway, so we'll get to that. Okay? The loss of the week. But it's okay, man. It's what I do next that matters, right? But anyways, let's take a look at our kitty cat because I wanted to buy it. I bought it last week, I think. So I'm not in it now. I'm trying to look. I probably was long here. It was stops. So yeah, it was one of those things, right? Where my plan last night was this. But I was in here, so I didn't add to it because I was only up at some point like 30 pips or something, right? But anyways, I didn't add because I'm conservative. But I was in and it was profitable. I had no risk and all that kind of stuff. There was some reason. Yes, I see the risk. I'm not blind. I ain't no, right? I see it. So what am I going to do? Cash out here? Then why did I take it? If I'm not afraid, then why did I take the trade? Why don't I just hide under my deck? Help me, Joe Biden! Right? Let me in the bunker, Joe Biden. I'm not afraid, man. I was at a pretty decent trade last week. No risk on it. Hardly any reward. So I'm like, I want to make, and it didn't work. Okay, great. So, but now what? Well, market conditions have changed and I need to adjust. Sorry, I think you can tell. I'm exhausted. I think you can tell. I'm running on adrenaline, so sometimes I go cuckoo. Okay, anyways, let's get back to that. This is how I see it. Okay, this is how I see it. It's not trending. I'm a trend trader. It's not trending. Just cool. Just be cool, man. Just be cool. Remember, I'm going to be here all day, every day for the end of the year and all next year. And like, I'll be here. And my job is, ideally, if I'm a trend trader, to make a lot of money in uptrends or make a lot of money in downtrends. Don't just think I'm only Japanese yen seller. I'll just be only a Japanese yen seller for the next 6 months. And in the next 6 months, there might be 3 really good trends. And I'll make redonkulous returns, I guess. I don't know. And then so right now I'm just like, I could buy it at the bottom here. Okay. But eventually I'd like to see a breakout. Okay. That's all. And we got time. Dude, we're on the 2nd day of November. Once again, we got a Fed meeting tomorrow. It started today, right? Yeah, hopes like it's consolidation. Like just, I'm still in wait mode, right? So again, Fed meeting, Bank of England, NFP. Like, I'm not that eager anymore, but I'm not walking away from trading. So like, look, all this news could drop it right down here into my buy zone. Okay. Right? Yeah, Matrix, it does take time. And you have to understand, I made a lot of mistakes over the last 20 years. And I believe I learned from them because I put a lot of thought into what I do. I don't just sit and trade. It's just not how, and anyone that's read my book knows that. I didn't just trade. Because the more I traded, the worse I got. I started as a bad, I think somewhere in my book, by the way, people, the reviews on Amazon.com, they're like, this is like every other book ever written, right? And other people are like, this is the worst book ever written. And other people are like, there's typos everywhere, right? So let me ask you, does this sound like a normal trading book? Because I haven't read that many. But I said in the beginning when I first started trading Forex, I sucked. I literally say this in the book. When I first started trading Forex, I sucked. But I worked really, really hard trying to focus on very specific tasks. And I'd spend weeks just trying to perfect my entry or test different stop sizes or test different moving averages or test different oscillator settings. But I'd spend weeks, I'd spend months playing around with RSI and stochastics and MACD, but test this and measure and adjust. test, measure, adjust, test, measure, adjust, test. And after a year, I sucked less, but I still sucked. But I believe it was the learning process that helped me improve. I didn't just trade a lot. I don't think that will make you better. One example I always give is I know people that have golfed for 30 or 40 years and they're still really bad golfers. They golf once or twice a week for 40 years and they still suck. So I think trading would be very similar. You could just sit here and drop 25 trades a day and just be an absolute total mess. Or you can sit and learn how to hold the club properly, grip it, how to stand properly, how to aim properly, the proper shape of a modern swing, and focus on your hips. Focus on your lips, eclipse, elevate my soul. Got no self-control, digging down a hole. Wait, that's a U2 song. But anyways, like you focus, and instead you're focusing on technique and you're focusing on strategy and you're focus, on tactics, right? And that kind of stuff. And that was my approach. Okay. Right. Matrix, yeah, that's how I lost about 10 grand, but in education cost? Yeah, what do you mean by lost? And by the way, that's not even summer school at Harvard, so yeah. Anyways, okay. So I think I don't purport to be a great trader, the best trader, all that kind of stuff. But I do have a pretty good work ethic, and I have tried pretty hard for 20 years, and I've made plenty of mistakes, and I figured a few things out along the way. And I think it all just sort of adds up. But it's the level of thought, not the amount of trading. Oh, losing money on bad trades? Yeah. Okay. Darko says that's what I say, that you need at least one season to be good. Well, here's the thing. You actually need more, because when investors look at your trading, so they see January, Feb, March, April, May, June, July, August, September, October, November, December. Okay. But they see year one, right? Y1, Y2, Y3, Y4, Y5, for example. And this is important because in, let's say, year 1 and 2, you have a Fed that lowered interest rates. Then in this year 3, okay, Fed is neutral. So let's put flat interest rates kind of thing. And then year 4, Fed decides to really increase interest rates, and they're very aggressive about it. And then something exogenous happens in year 5. It's not even related to the Fed. It's not even related to the U.S. economy. There's a terrorist attack. There's a war. There's a massive environmental issue. And this happens, some sort of emergency, another COVID or something. So you could have 1 or 2 really good years, right, Darko? You're like, man, right? While the Fed's lowering interest rates, you're buying the U.S. dollar, and then you got Forex figured out. All of a sudden, this is like, ooh, it's not working as consistently. So you had 2 good years in a row, then you have a mediocre, and then you have a bad year, and then you have a worse year. And this is very normal, right? This is not me talking about Darko specifically, but even if you read Jack Schwager's book, before he started writing Market Wizards, he was his job was to analyze CTAs. So it's a very mathy book, lots and lots of math on how to analyze and choose of an investment vehicle like a commodities trading advisor if you're on the investment side, right? How do you pick a fund manager? And he said, one of the biggest mistakes is you see a trader has had 2 or 3 really good years in a row. And he says, so you extrapolate, wow, man, this guy's been doing 30% a year for 2 years in a row, so this guy's going to do 30% for me this year. Well, the problem is he'll likely continue to do roughly the same until something slightly changes. So the first part, only his past performance only establishes what will likely happen in current market conditions. That's it. And if market conditions change, past performance will not predict future results. Will they adjust? Will they adjust quickly? Will they adjust aggressively? Will they not adjust? Who the hell knows? Because the first part doesn't explain anything about the second part or the third or the fourth. So really, this is why institutional investors will look at all 5 years. And of course, they're professional investors, so they've been investing for 30 or 40 years. They remember all these things. And they're like, okay, so what did you do back in this year? What did you do back in that year? Okay, you had good performances. How did you handle year 3? Okay, that was mediocre, but it should be mediocre because that's what the beta was. So I wouldn't expect any sort of outperformance unless you're taking risk, and we don't want that. So if you took extra risk because you felt bad, you were making 30% here, 30% here, and now you're only making 5, so you want to get to the 30, so you increase risk, you're fired. We're not interested. So you should do mediocre here, and then they'll look for that. And then, how did you handle the actual change in policy for raising interest rates now, right? How did you handle that? Well, a lot of things changed here, and you were back to, you were back in the 20s. You're like, okay, that's good. Okay, good. So you did well here. Then you went through the transition period just fine, and then you were on the new trends, and you weren't just doing what you did 2 years ago. You see? And then that will help an investor say, okay, this trader, this fund manager did well in a downtrend, adjusted well in changing market conditions, and then, in fact, reversed course from 2 years ago and was enjoying the uptrend. So now, if there's ever an emergency, your analysis over a period of time is that this trader has the capacity. You don't know what they will do, but you could say you believe in the capacity of the trader to adjust quickly when there's an emergency, because they understand what's creating the downtrend, the uptrend. They can see the mediocrity and they adjust accordingly. And you're like, okay, good. And that's how you choose a trader, not just past performance. Okay. So anyways, going back to Darko. Yeah, I know I took that way beyond what you meant, Darko, but the idea is the service you're trying to provide is not absolute return, but consistency. Okay? Ultimately, when you meet with a rich person and you're like, hey, I'm a Forex trader, and like, oh, really? Right? And they're interested. Now they're showing you signs that they want to give you some money. You're actually competing with their other investments. You're competing with the stock market. You're competing with some crypto. You're competing with real estate. And so you have to look at it through their lens, right? If they're thinking about giving you money versus real estate doesn't have much volatility because it's not mark to market and it's not liquid. Okay. Thank you, Russ. Yeah, so, right, so who said it? Yeah, Matrix said, lost money taking bad trades. Let me show you how to lose money. Let me show you how to lose money. All right. So here's how I lost money, and I think it was a good trade. Winning and losing doesn't mean good and bad. You really have to learn how to understand that. I'm not saying you don't, but I'm just trying to make that point. All right. We had a big move here from the Bank du Canada. Okay. And they just totally cold turkey killed all their taper. By the way, does anyone know when the RBA is going to end their taper program? End their QE program? February of 2022. So again, if I have the sound on the TV behind me when I got all the talking heads and I actually hear people being interviewed, okay? But thank you guys. Those are good answers. They give opinions. The people on TV give opinions, and a lot of the time, if not most of the time, they're really bad opinions. Okay? If you can see when someone does the research, because I'm telling you, it's in plain English. The answers are there, and there's these experts you read about and see on TV. They're not that good. You should not listen to them. They're only 1% smarter than their clients. And their clients might be idiots because they hired this guy that doesn't do the work. But because this guy's got $1 billion or this gal's got $1 billion, she gets invited on CNBC. Mostly because you pay some money. Okay? So, great. But it doesn't make them good. So anyways, we know we should not have opinions, but instead facts. So that's a factual thing. I know, well, I have to read the statement on Thursday, but as of 6 weeks ago, the RBA said that most of the market right now is wrong. Okay? Literally, the head of the Reserve Bank of Australia literally said he doesn't understand why people are pricing in rate hikes on the Aussie dollar. He's like, they're wrong. We're not even thinking about raising interest rates till 2024. And yet some are trading like they're raising next year. Next year? And then he's like, and he specifically mentioned, for those that are pricing in a rate hike in early 2023, they're wrong. Now, something changed last night. So something changed the last 6 weeks. That's why I need this RBA statement that gets published on Thursday. So now I can update my facts. But when you get such clear opinions, and the RBA has always had a culture of frankness, and that hasn't changed. Okay? So anyways, Bank of Canada went cold turkey, cut all quantitative easing, no taper, just killed it. Is it today, Ashish? I thought it was Thursday. Okay? But anyways, all right, so there's that. Okay. So I was playing it like a top, right? This is the news. So, right. I don't worry about this peak. Top, new month. Wait, that's the November pivot, but let's put it here. Weekly. Let me just redo this. Okay. Anyways, new month in the back of my mind. Weekly sell. Double top on the weekly sell, lower low, lower high, and I waited for hours. Okay, I didn't sell here. I didn't sell here. I almost sold here, and then I sold here. I think that was a good trade. Yeah, Governor Stevens was great. Thanks for bringing that up, Turk. Governor Stevens was great, but Lowe is great too. He's a well-spoken individual, and he gives really, I think, sort of honest, humble, easily understood answers and reasoning. Like he'll be quite frank. He'll tell you he doesn't understand why this, right? Why people are pricing in an interest rate hike, because they're wrong. I mean, holy crap, that's what he's saying. It's a pretty amazing. Okay. People asked him, when is Australia going to, issue a central bank cryptocurrency? And he's like, look, we already have the most advanced payment transfer system in the world. He said in Australia, an Australian can move money around Australia from one bank account to another in 5 seconds, and it's free. Now, if an American does it, it's going to cost you a minimum $50 from your bank, and it's going to take 3 days. 3 days. In Australia, it's 5 seconds and it's free. So he said, well, he can't figure out a good use case. He's like, why would you need a central bank? Right? And he's like, maybe things will change. He's like, but there's no reason for the Central Bank of Australia to spend hundreds of millions of dollars creating a central bank cryptocurrency for retail. I mean, there's a couple of institution reasons, and they're testing things with, as you probably know, Singapore and stuff like that. But he's like, but there's no use case. We're not going to drop hundreds of millions of dollars. And he's like, things might change in the future, and then we'll adapt. We'll look at it then. But he's like, no, I don't. He's like, I don't understand why it would be needed. Now, a lot of people could not say, I don't understand. I don't see the reasoning. I don't get it. But Australia, the Central Bank of Australia has always been that way. We think it's too high. We think it's too low. We have no idea. They'll actually say stuff like that. And you should be familiar with your central banks that way if you're going to be a professional trader. Okay. Cool, right? So anyway, I waited, and I would do this trade again. That's why I think it's a good trade. I have my resistance. I look at this as the fundamental move, and at some point this will likely happen. But we got crushed on the commodity issue yesterday. China's shutting down purchases. Think of it that way, right? Okay, think of it that way. I got blindsided by a change in policy in China. So I took a loss. Yeah, I lost 33 pips. Cry me a river. What am I supposed to do? Be afraid of a 33 pip loss? Then I'll never get out of bed. Right? I can't get out of bed and go to work today. There might be an asteroid and we'll all die. Right? And I'm like, dude. So my goal is to set it up the best I can. Again, here's the weekly sell. Here's yesterday's daily sell. Here's the reversal pattern. It's not quite a double top, but I'll call it that if I'm only focused on, the right-hand side here. So we have a new week. So this pivot point targets way down here. Remember, I already want to sell, so this isn't even about the pivot points. I know I talk about pivot points a lot. They're just technical levels. It's just an algorithm measuring what happened in the last period and helping me try to understand what might happen in this current period. That's all. So I'm like, okay, if I sell there, then the probability is here. Then I look at daily, and daily held, and I'm still in my sell zone here. And now, I have it's not a lower low, but it's a lower high and whatever. And I waited. I didn't sell here. I didn't sell here. I didn't sell here. I didn't sell here. I didn't sell here, but I sold here. And then I went to bed. And oh my God. And that's how you lose money. That's how you do it. That's a good trade, in my opinion. Okay? And now what? Now wait. For you to justify my trade. Okay? I don't trade Aussie Kiwi, sorry. I know probably everyone in Australia and everyone in New Zealand pays attention to that. I've actually had guests in my house that are Aussies, and he was buying a race car out of New Zealand while he was here, but he was here to buy race cars, but he was buying a race car and it happened to be in New Zealand somewhere. And so he was doing everything off of his phone, which is cool because this was probably 3-4 years ago now. So Aussies were already advanced with mobile apps and stuff. So now he was, hedging or trading the exchange rate from his phone for the Kiwi dollar so he can get a better price on the card. And he's not even a currency trader. And I'm like, dude, you're doing a good job. Yeah, he's playing the exchange rate between Australia and New Zealand in real time from his phone. So buying this race car and having it shipped back to Australia while he was in America looking at several race cars, right? So obviously he could do the same thing with USD. I'm like, cool. Cool. Okay. So anyways, USD kitty CAD. Nice. So there are some currency pairs right now that look better than others. Nothing looks disastrous quite yet. You'll notice I'm still in my trades at 72. So I'm still up 250 pips per trade. Times 2, right? So I'm still up 500 pips on this one pair. Yo na, yo na, bum 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 bum. Right? Yo na, you got me on my knees. Yo na, I'm begging dollar please. Yo na. Yeah. Anyways, this position is still 500 pips profit. So I'm looking at this like, should I be on panic mode? Should I not be? Going back a couple of weeks ago now, go back a couple of weeks, we knew that this area would be a problem. We saw this double top. It's there, right? We see the MM2. We discussed it 3, 4, 5 times and what could happen, and it created if-then statements. And now I'm in a situation where I'm not buying anymore. Doesn't mean I'm selling. Doesn't mean I'm taking profit. I might have to. But what do we know? Well, there's some level of interest here. There's some level of interest here. There's some level of interest here. I'm more interested in getting through this week. I expect some volatility. And maybe it just farts around and we just have that for a while. Or maybe it just drops like a ton of brick and maybe I do change my mind on these things. But like, what would a normal situation be? I would say in a normal situation that knowing nothing else that I would want to buy in there. Okay. Right there. Cool, right? My basic standard operating procedure. Cool. Cool. So, is it shocking then that this might happen? No, I don't think so. Okay. Okay. Cool. So a bit of a psychological discussion today. I hope that's okay. Yeah, this is boring consolidation going into the Fed meeting. Yeah. Well, it was interesting though, Hope, because a couple of people in the day trading group expressed concern and even a little bit of frustration. Now, the interesting thing is, through the discussions, the people had discussed in the discussions the research they did to help them have the strength to go through a consolidation period. And you just got to remember, like, some people in October made a huge amount of money in the span of 3 weeks. So there's sort of a buildup of attachment to it. So when it's gone, you miss it, maybe more than it needs to be, right? So like here's something that we discuss often, just to give you a glimpse. Okay, so what we're basically reviewing right now is what happened in the month of October. By the way, I predicted it 6 months in advance to the day. You're welcome. Okay. So now that we got that big move, what could we observe? Remember, it's the observation and what you learned from the experience that matters, not what you did, but what you learned and what you take away. Look at the relative importance of that 4-hour 21. I'm just going to pick out one simple little indicator. Okay. So let's take a look at that. There we go. Let's take a look at that. We'll get rid of this moving average. We'll get rid of the 5H. We're just going to dumb this down. And I think I can get rid of weeklies here. I think no, I want that one to stay. Yeah, so delete that. And we can get rid of day trading. Delete. Okay. So, look at what we have here. Interesting, right? Now, this 200 EMA represents fair market value. Okay. Now, this other one represents a bullish support. In fact, I call it dynamic in my book, dynamic bullish support. So you can see, like, somewhere around the first day of October, it became bullish. Buy. And by the way, we did all of this. Buy. Now what? Bye-bye. I went from red hot to cold-hearted snake. Okay. Right? Neat, right? That's all. So one might simplify the analysis and say sometime in the near future, because now remember, it's not where it'll be in the future. So you could do something like indicator, custom, zero lag, 200, color. This one would have to be forest green. And how about dark olive green just for fun? And make it fat so it's slightly different green. And you hit there. And it's a little different. But you know, this is a slow moving average, right? So it's saying right now, basically, there's three things talking to me. One, the 200 EMA. Two, the zero lag 200 EMA, which is taking out, it's trying to take out the laggy effects of a moving average. And three, the central pivot point. And they all say, look, it doesn't say trade, it says look for a bullish reset to occur around 74.24. So let's just call it 74.00. So this comes down, this goes up, comes down, That's what I think is in play. And the advice I gave to everyone yesterday in the day trading group last night in Asia, 8:45 at night, we're right here on top of the 21. I'm like, look, we haven't breached the 21. It hasn't happened yet. Yes, you can be fearful. Yes, you should recognize, definitely recognize that we're at resistance. Absolutely critically important you understand the risk. But also have a plan for your behavior if it fails. And we dropped below and I'm out. I had a chance to win the game. The ball hit the rim, hit the backboard, hit the rim, and didn't go in the net. Game over. I'm out. But I had a free shot. I took the shot. I did my best. Okay? So now I'm like, oh, you know what will be interesting? This. That's what I think is interesting in the near future. So I got to get through a crazy Wednesday, a crazy Thursday, and a crazy Friday. Maybe Friday afternoon I get this. Maybe Monday morning I get this. Cool, man. I've been here for 20 years. I don't have to have it today. I can wait. I can be patient. Never be so eager, right? I'm not eager to lose money. So anyways, cool. I got things to do. I got work to do. I got things to analyze, things to watch, things to ponder. And I love it. It's a great job. Being a Forex trader is wonderful. And I'll see you guys tomorrow, unless you're in my day trading group. Then I'll see you for the American close. And then I'll see you again for the Asian Open. So peace on earth. May the pips be with you. May your profits be above average. And thank you for all the positive energy. And no bad blood with Yona. Hope to see you tomorrow, Yona. Cheers. Goodbye.